Hello traders and welcome to another video review. Today is Tuesday, August 6, 2024. Let's find out what's going on the economic calendar for today. The most important overnight data were in form of the interest rate decision. The interest rate decision was, of course, from the Reserve Bank of Australia that hold the interest rate at the level of 4.35% as expected. Together with the interest rate decision, monetary policy statement was issued and the rate statement. With the other news, BRC retail sales monitor from the UK was released at the level of 0.3%, and the Japanese data in form of the household spending were worse than expected figures, so pretty bad data from the Japan. Unemployment rate in Switzerland stays at the level of 2.3%. German factory orders increased from -1.7 to 3.9%, beating the expectations of 0.4%. Retail sales in Switzerland falls down from -0.2% to -2.2%, which is way worse than expected. French non-farm payrolls 0%, worse than expected. And we are still waiting for construction PMI data from the UK, retail sales data from the Eurozone. This one is scheduled for this at 11 o'clock. And then during the New York session, we got the data from the US in form of the trade balance, exports and imports. This data are scheduled for this at 2:30 together with the trade balance from the Canada. Atlanta Fed GDP now is scheduled for this at 4:30. And global daily price index from the New Zealand is scheduled for release at 5 o'clock. The key event of the New York session is short-term energy outlook from the US, which is scheduled for release at 6 o'clock. At 7 o'clock we got the free note auction, and 10:30 we got API weekly crude oil stock data. So pretty intense day. We got one very important event in form of the interest rate decision from the Reserve Bank of Australia, so we'll definitely take a look at the Australian dollar. However, right now, let's take a look at the euro-dollar technical picture. Euro-dollar technical picture on the 4-hour chart is showing us very nice swing to the upside from the lows of 1.0778 to the highs of 1.1009, and this is a nice increase. Let me just figure it out how big this increase is. Actually, how many percent? But it looks like it's a big increase. Anyway, I guess this is the tool we need, and right now, of course, we are in the let's say correction mode, right? So from the lows to the highs we got 2.14 increase, and now bearish engulfing pattern has been made on the top of the move, right? We got the bearish engulfing pattern, and the level of 1.0948 now is violated, so it will act as the technical resistance together with the 1.1009, and the market is heading towards this level here, but I think that level might not be really helpful, which is why we are going to move our technical support to 1.0894, and let's say we are going to take this level 1.0904 as the technical support and the nearest demand zone. This one is pretty clever and pretty important, so let me make it thicker, and the rest of it is just the regular technical support levels. As you can see, very dynamic movement. Now everyone is wondering how deep we go before the upward movement will be continued. We are coming off the extremely overbought conditions right now at the level of 16 points, which means the bulls are still in charge of the market, and the short-term outlook for the euro-dollar remains bullish. Let's find out what is going on the Australian dollar. So the Australian dollar, as you can see, is bouncing from the level of 6,351, and it's now back to the zone which was very often tested. 6,584, 6,500 and 70, 6,552, 6,570. This is the zone, and it looks like the market wants to break above this zone in order to continue the bounce. Very, very big pin bar here, which is why we are going to mark the lows of this pin bar as our technical support and important technical support. However, if we switch to the daily, let me just take a look what is the situation here. There you go. There was a historical technical support around the 6,365, so that's fine, and this technical level is very close to that extreme low, 6,341. Altogether, these three levels create a demand zone, which corresponds to the extremely oversold market conditions. We went down from 6,800 down to 6,350. 51. Okay, so that's a almost 450 pips move, which is very, very strong movement. However, the daily pin bar here is telling us that the dips are being bought back up, and we might see some sort of the relief rally or even short squeeze soon. All the bulls need to do is to break above this zone here. Let me just mark it with our blue arrow so you can see, guys, and there you go. So what we need to do is to break above this zone here and continue the rally higher. So quite possible that this is what the market wants to do. Okay, because of the crude oil data, let's take a look at the crude oil daily time frame chart. What do we see here straight on is another hammer pattern after the sell-off from the zone of 78.87. It used to be the technical support here at 72.48. But it looks like this technical support has been violated and the market targeted 71.41. The newest technical support might be considered as the low of the yesterday's low at 71.67. However, the market didn't actually touch the extremely oversold conditions just yet, so maybe when we go back here again to test this zone, maybe then the extremely oversold conditions will be triggered. For now, we can see straight on the where is my, there you go, the line of the technical resistance, so which is somewhere here. There you go, 74.61 technical resistance, and of course there's few more here, like for example the level of 76.39 and the level of 887. So market is under the bearish pressure. However, the lows has been not really challenged, and we want to see more in this movement to the downside in order to judge whether the downtrend has started. And last but not least, we are going to talk about the Bitcoin. As you can see, Bitcoin hit the extremely oversold conditions as well, made a new local low and a swing low at the level of 49,561. We will mark this level as the technical support right now, so we will mark it sorry in green. There you go, so that's the technical support. And just recently we bounced back above the level of 50,000. Basically today's high was 56,303. So slowly the market is moving higher, bouncing from the extremely oversold conditions. Of course, on the 4-hour chart is the same situation. Market is bouncing from the extremely oversold conditions. Let me just change these two levels here, 53,023 and 54,291 for the technical support colors. So now we can see that this is the technical support as well. We might see some sort of the movement to the upside. However, I wouldn't be very hopeful about this, because we need to break above the level of 50 in order to continue to move to the upside. The level of 50 would be somewhere above the $60,000 basically. So let me just mark this level here, like 59.99. Okay, that's not a problem, as the major technical resistance in the short term that needs to be violated for the market to continue the up move. So our blue arrow goes here, and this is the key level in the short term for the bulls that needs to be violated for the Bitcoin to go back to the game and fly above the level of 64,000, or challenge the level of $64,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.